say one of the benefits is working with a CPA like yourself that really specializes in working with those type of business owners.
Yeah, definitely. So you want someone who understands your business really well, understands your operations. So a lot of times there are things that can easily get missed just by the generalizations that happen broadly across business industries.
Med spa owners, when it comes time for taxes, do you feel the overwhelm? Are you scrambling just to get everything done and potentially missing out on saving tens of thousands, if not hundreds of thousands of dollars in taxes? Well, if that is you, then you're going to want to stay and listen to this interview today. I have special guest Kristi Thiel. She's the owner of KT CPA, and she is going to be talking about five tax strategies for med spas to save tens of hundreds of thousands of dollars. Hi, Kristi.
Hi, Caitlin. How are you?
Good. I'm so excited for this because I have to tell you that so many of my med spa clients, this is a hot point. Feeling overwhelmed, not knowing what they don't know, and missing out of tens of hundreds of thousands of dollars. So let's dive right in and start with the first strategy that is going to help med spas save money on taxes.
Yes. So my first big point to people is take advantage of timing. Yes, that's key. Timing is always good. But also consider net cash flow before you make those timing decisions. Towards the end of the year, you'll always hear med spa owners especially saying, oh, I need to purchase equipment and vehicles, I need more write-offs. But I want you to consider the net cash flow from that, because a deduction may or may not be a whole deduction, and it's also different from a tax credit. So a deduction, you're reducing your taxable income. A credit goes against your total tax bill. So taxable income by percentage based on your tax bracket, that's how do you get to your total tax bill. So you want to consider that first of all. But the other thing is you also want to consider when you are on the cusp of a different marginal tax rate, or perhaps you personally have a tax credit that you could be eligible for. Child tax credit's a big one right now for business owners who have kids. If you are on the cusp of those thresholds, you really don't want to miss out on that. Last year, stimulus money was a big thing, but if you're near the $400,000 taxable income threshold, you know, that child tax credit kicks in there. So you want to look at timing overall and where you are tax picture wise ahead of time. So you want to kind of know where you're going to land and then see, is it really worthwhile to spend the money? And also, is it something that benefits your business in the future? Is this going to result in more profits in the future? Especially if it's investing in equipment or supplies or things that you're using when giving treatments, it might make sense to purchase ahead of time, especially if you are a cash method taxpayer. So there's cash and there's accrual, and it sounds very confusing, but with cash, essentially you're following the cash in and out the door, and that's how you come to your taxable income. So it might make sense to buy those supplies ahead of time if you're not required to record inventory for tax purposes. Of course, there's a lot of nuances involved in that, and you want to look, the devil's always in the details, but timing might be key.
Awesome. Okay, so let me recap that to make sure that me, the layperson, in our audience, the layperson, not the CPA, got the big takeaway there. So I really want to see exactly where I'm going to fall in my net profit of what I'm going to be paying taxes on, to really see if I need to get creative or I need to really think about expenses that I can prepay or invest in, because it could potentially save me money right away And then second part is don't just like spend to get a deduction, but make sure that it's actually going to be working for your business.
Yes, exactly.
Awesome. Okay. What's number 2?
Number 2, look at things that you think of as personal expenses and translate that to business. Commonly, business owners forget to deduct their business meals, home office, travel. A lot of that is business related. When you are having a meal with someone discussing business, there's your business purpose, right? So, and this year especially, those are 100% deductible. In other years, it's been 50%. Right now, it's 100%. Make sure you get every single meal in. It adds up, but home office usually winds up being potentially a bigger deduction for you. So you can take the direct costs of your home office, your furniture, computer, everything that goes into that. That's deductible, but also the indirect expenses. This is what people forget about. Your home office, where you're spending time helping manage your business, and if it's exclusively used for your business, a lot of med spa owners have a space in their home dedicated to that purpose. So you can deduct a portion of property tax, mortgage interest, utilities. It all adds up. And so this has resulted in saving thousands of dollars for business owners. Also travel. Turn your personal travel into a business purpose. A lot of times you're traveling somewhere where you have a mentor or a colleague or someone else in your profession. You'd love to visit them, learn from them, maybe see what they're offering that you haven't tried before. And it's great to turn it into a business purpose. You can potentially deduct a portion of your travel costs, potentially all of your transportation costs to get there, depending on how much is business and how much is personal, but you can at least get a portion of your travel to write off as well.
That's so good. And I know from my own perspective that all of those things that you just talked about can feel overwhelming to try to find when it's time to turn those things in, right? So it's so important to prepare and set yourself up for success to make it easy and manageable. And I know I personally have a template that they use the same template every single year. And so when I reconcile, I just put it all into those different categories and I hand it over to my accountant. So it's not such an overwhelming task. But if you wait until the dying last second when your accountant is saying, let's go, get your stuff in, where it's crunch time kind of thing, you miss things, it's overwhelming, and it's hard to really make good decisions when you're rushed like that.
Yes, and the other thing that's great, I talk a lot about systems, getting systems in place so it's easy and you don't have to think about it as much. Anything direct in your home office, charge to your business account so it doesn't get missed. Any business meals, charge that to your business accounts. Business travel, especially if you're having meals or doing other things specific to your business, make sure that goes in your business account. But the other thing is, if you are structured as an S corporation, say, or a C corporation, you need to have an accountable plan so that you are reimbursing yourself for those expenses on a regular basis. When you have to do it, say, on a quarterly basis, and you have to keep documentation of that, it becomes routine. And then you get reimbursed and you can move on to the next step. So it's not at tax time, you're so overwhelmed and then you forget all of those other things that benefited your business, but you didn't deduct. So you don't want to leak money there.
Would that be something that your bookkeeper would help you with, or is that something your tax accountant would help you set up and manage?
Yes, so tax accountant can help set that up, but it works really smoothly if you have whoever's in charge of accounting doing it on a regular basis, and they can kind of hold you accountable to that. But also, if you're meeting with your tax accountant quarterly, I have a lot of clients that I meet with on a quarterly basis so they know where they are tax-wise, then that really helps the process too. That's something that always comes up. Hey, have you already deducted all of these things? Have you thought about these? And a lot of times it's just, we need to get in the routine of it and get a system in place for reimbursing.
Got it. Awesome. What's next?
Yes, next. You can rent out your home to your business up to 14 days a year, tax-free. And I know people are like, well, so what does that mean? So it's tax-free to you personally, but what that means is you have a tax deduction on your business side, but you have taxable income that's not taxable to you personally, as long as you keep it under 14 days. So you're getting a deduction by renting your home to your business. And a lot of people, you know, if you want to hold, say, a strategic planning session or a meeting with your partners or something that you need to meet for, a lot of times if your home is already set up for that, let's say in the living room, you've got a big TV, you want to blast things so you can look at them. It's a great opportunity. I mean, you're going to pay how much for a conference room? You should know what that rate is locally, but it gets pretty expensive. If you want a full day in a conference room or somewhere else, especially if there's windows and it's not as closed in, that can add up a lot. So you can actually save thousands by renting your home to your business and conducting business there.
Well, I love that. That's a great one.
Now, one thing, I will add one thing to that. You do need to make sure it's a separate entity. So you need to be structured as a corporation. So you can't do it, say, if you're an LLC and you're reporting on Schedule C with your income tax return, it doesn't work that way. So it does have to be separate.
Got it. Got it. It was a good clarification there. Okay, next.
Yeah. You can hire your children and pay them tax-free. I get asked this question all the time, especially now, technology-wise, teenagers are a lot more tech savvy. They're really good with social media. So I know a lot of business owners who have teenagers who can totally help with that. And this is a great opportunity to teach them finances, teach them how job duties work. And, you know, you can also set aside some money tax-free potentially, as long as they don't go over a certain threshold. And then you're saving the money for the future, whether that's college or a down payment on a house or a business that they want to start. So it's a great opportunity. You need to make sure you're not going over the earned or unearned income thresholds. If your teenager has an investment account and is making money on that, that's a consideration too. So as long as you don't go over that under the age of 18, they're not subject to Social Security and Medicare. And if they're under the filing threshold, they don't have to pay the federal income tax and state income tax. So it's a great way to give them some money for responsibilities and teach them financially.
I love that. I love that so much. That's good. I got 4 boys too, so I'm gonna use that one well.
That will save you,
right?
Yes, and they're helpful with those administrative tasks that you might not have time for. So.
Absolutely, and definitely better with technology. So any other strategies that can help med spa owners with their taxes?
Yes, okay, this is the big one for me. Take advantage of opportunities to defer tax while also protecting assets. Now, a lot of people think of this as like, oh, I need a retirement plan, I'll defer some tax. You can't necessarily access those funds until you're of a certain age or you take a penalty for that. I am a fan of a 401k with a Roth option if you're going to go that route. You know, you can get up to $19,500 in deferred income. So you've got pre-tax dollars you're contributing up to $19,500 a year. That can save you a few thousand on your taxes, depending on your tax rate. So that's thousands right there. But if you have a Roth option, you can contribute up to the same amount, even if your personal income threshold is over that Roth contribution threshold in general. But through the 401k Roth option, you can grow your investments tax-free. So you're not paying the tax when you pull it out. This is a great option if you plan to be in your business for several years to come and you want to grow that over time so you can contribute each year to that. and it'll keep growing. And this is one thing that I certainly hope that doesn't ever get taken away. We were scared this year that the backdoor Roth conversion, as we all know it, we were scared that might get taken away. As you know, there's a lot going on right now. The Senate has the Build Back Better bill, and people are asking what's in that, what are they going to do with it? We don't know at this point. It was basically the Senate had made their changes, it was stalled, so we don't know. But right now, you know, take advantage of, if you can contribute to a Roth or transfer something to a Roth, go for it. You definitely want to take advantage of that. I don't see income tax rates going down anytime soon.
Right.
I only see them going up, especially if you're above $400,000 in taxable income. That's kind of the number they keep calling out. But aside from that, other opportunities, invest and grow your assets. There are what we call captive insurance companies or 831B plans. You have to be extremely careful about this. But the great thing about these is you can insure the uninsured risks in your business. Things like supply chain issues, the labor market, difficult right now, hiring, especially certain positions. You could also insure things like potential shutdown, or, you know, if something like that were to ever happen again, hopefully that won't happen again. I think we're all back in work mode and trying to find a way around those things, right? But this is a great way that I have seen a lot of business owners save thousands, even hundreds of thousands on their tax bill. Now, it is complicated because you're contributing to an insurance company that you're setting up. It's as a C corporation. And so when you do eventually pull money out, it's subject to capital gains rates. So you're getting dividends out of that. But capital gains rates are favorable because they're typically lower than your marginal tax rate. So that's an advantage there too. You can save a lot of money and grow the money while it's in there, as long as you don't have to pull it out. But I do recommend being very careful who you do this through. I have someone locally who this is all they do. There's a company that specializes in this, and frequently these are done through larger insurance companies that provide commercial insurance. They also offer stuff like this, but you have to be very careful about it. The IRS has tried to go after some of these in the past, because if it is written in a way of, we're just trying to look for a tax opportunity here, and this is how we're going to structure it and do it, they're likely to come after you. It's all about ensuring those uninsured risks in your business, right?
Okay, gotcha. Okay, so a lot of good tips and strategies that you shared, and really one of the big ahas and takeaways that I'm hoping people watching are going to get from it is that you don't know what you don't know when it comes to your taxes and finances for your business. So it's really important to surround yourself and create that kind of board of directors to support you, advise you on your best interests. And who should be on that team is absolutely an experienced CPA, a really great bookkeeper, not someone that just, you know, like you give them the receipts and then, you know, that's it and done. And then also a financial advisor as well, to potentially set up that 401k and your additional investments and whatnot. Is really kind of a core financial team in essence. I guess you would include also on there a banker as well. So really, now that I think of it, like really important for team advisory board when it comes to your finances. And oh geez, well, you should probably just throw your attorney in there as well, right?
I was just gonna say that. Yeah.
Yeah, because you know,
Yeah.
we're all experts in our own fields, but it's absolutely key to bring the right people to the table and work collectively in order to really just get the best outcome possible for your business.
Yes, and there's always lots of nuances and limitations and exclusions and all of these things that apply. And especially when you cross state lines, different states have different rules and regulations, right? So I always like to say there's never a one-size-fits-all approach. It's very circumstantial. So you want that team that can help you plan and know where you are. So you want to be in contact with that team during the year so they know what's going on and what might help you. If you only meet once a year when it's tax time, that can be very problematic, and a lot gets missed when that happens.
Yeah, absolutely. Okay, one last question that I have. I know that you really specialize in working in the medical aesthetic industry, med spa business owners. What would you say one of the benefits is working with a CPA like yourself that really specializes in working with those type of business owners?
Yeah, definitely. So you want someone who understands your business really well, understands your operations. So a lot of times there are things that can easily get missed just by the generalizations that happen broadly across business industries. Just knowing the flow of things and when you purchase and how you provide your treatments and all of that, knowing your operations can be such a great advantage there.
Yeah, well, I'm a huge believer in that in all aspects of the professionals, experts, advisors, consultants that you work with. And that's why myself as well, I only work with med spa owners when they're marketing and business consulting. So I'm a true believer in what you preach as well regarding, tax strategies for med spa owners and working with the CPA that really understands that industry. So that's awesome. Well, if you have watched to the very end, I know Kristi has a special offer for you. What is that, Kristi?
Yes, I'm happy to do a free 15-minute consultation to see if there's anything that I can help a med spa business owner with tax-wise, or maybe it's just cash flow in general or profitability. I'm happy to have a conversation and see how I can help.
Oh, that would be huge, 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 especially on that, of course, taxes, but definitely profitability too, because while there is massive amounts of revenue generated in med spas, as you know, the profit margin is few and far between, really, based on how you're running your business. And, there's lots of people out there making or generating millions of dollars, but not really keeping any for themselves at the end of the day because they're just not set up properly. So that's a huge offer that I encourage everyone to take advantage. I'm going to link up in the show notes here how you can get in contact with Kristi and find her at KT CPA LLC.com, and make sure you take advantage of that free 15-minute consultation. Thanks, Kristi.
Thank you, Caitlin.
Bye.